morning. Rohit Srivastav is here to put this in perspective for us. Rohit Srivastav, founder and market strategist, IndiaCharts.com. Thank you so much for joining us this morning. In word, how do you sum up what you're seeing on the screen this morning? Is that profit booking? Is that consolidation that we are seeing? What's going on in the market today?
So we've seen more than 5-6 day run up in the market overall. If we just look at that, it bottomed around the 8th of August, and now we are around the 20th of August, looking at some kind of gains finally happening in the market.
Right.
And the judgment call is whether the worst is over. Are we out of the woods? Can we start the
So
runway
what's the
move?
judgment on that,
I
Rohit?
think
What is your judgment? Are we out of the woods or not as yet?
not 100%. I think we will be in probably a month's time. We should be in what we call the last stage of this correction consolidation that started from the July top.
Right.
And once we are done with that, I think we will have a very long, winning streak in the markets. That lies ahead, I think, post September, October.
Right.
But between now and then, we will remain open to some risk of, downside moves
Right.
or volatility because of all the events that are happening around us, but also because you see we've sort of diverged from global markets over the last couple of months, where they've continued to go higher and we've not.
Right.
But I think global markets are now looking tired and exhaustive, especially the US. And they may be at the start of a corrective phase. So that is going to become an additional overhang as we try to go up. So that's where I think only once those corrections have also happened, plus a lot of the negative stuff, especially related to India-US relations, is behind us. That's when we will see a sustainable move, which is why I would like to give it some more time into somewhere in September for the worst to be behind.
Right. We are almost a month away from the completion of 1 year since markets saw their lifetime high. In fact, 26, 27 September, I remember, is when markets had touched their all-time high. It's going to be almost a year to that in just about a month from now. So all the investors who had taken positions in the bull run and had invested money, waiting patiently for a year for their net returns at least to become positive, what is your advice to them? What should they do at this point? Hold on or book profits as they see them?
So very clearly, you're referring to investors, and for investors, it's been a bull market that is going on. This will only look like a consolidation, except if you're stuck with the wrong stocks. This has been a period of shakeout of companies that have not been able to continue to produce the kind of earnings that the valuations demand. So if you have a stock which is trading at 70 times, for example, and if it's not growing at 30-35% per annum in terms of the earnings growth, then it's certainly going to give up a lot of those gains, because that's what the valuations are pricing in, that you'll have some kind of a CAGR on the earnings side. So I think that cleanup part is done. You can clearly see a divergence within mid caps and small caps where performance has happened and where it's not happened. But on an average, the mid and small caps are also giving us better earnings growth than the large caps. So people who've invested in that segment on an average would have done better than those in large caps. That has been probably the surprise for some people who probably thought that would correct more, but that's the fact that earnings growth is better in the smaller segment, and the performance is also going to be better in the smaller segment. It's just that you need to become a little more choosier, make sure that the stocks you've gotten into do deliver the growth that you're anticipating.
Right. So should the calls be stock specific at this moment or sector specific, Rohit? Are there potential sectors where you see some momentum to build up in the coming months?
So it's always a mix of both. You were mentioning the auto sector, for example, some time back, and it has been one of the outperforming segments of this market. Stocks like Hero MotoCorp or M&M have continued to rage higher, even though the market has, corrected. So they've made new highs above where they were in September. So we've clearly seen the auto sector outperform. So that does tend to happen where you'll have certain, sectors do well, and there can be multiple triggers for that. The easiest one some time back would have been to think of interest rate sensitivity, because interest rates were cut significantly in India. And I do think
GST
there could be
reforms are likely to augur very well for the auto sector as well.
Yeah. All of that put together, because some things some things you don't. But interest rate sensitivity has not worked so well maybe for real estate or metals. But I do think that interest rate sensitive sectors would do well, because there could be more rate cuts down the line. as globally we move towards a lower rate environment, especially from the US side. So, and India also, because we are seeing slower growth at a macro level and the impact of tariffs, I think somewhere it will give us a lot of room to cut rates, including lower oil prices. So, the rate cycle will push interest rate sensitive sectors higher, and autos is probably the first one to show that outperformance.
Right.
The others will come in, whether it's metals, whether it's reality. I think they will all come in on that.
All right. And final word from you, Rohit. This new SBI proposal, SEBI proposal, I beg your pardon, that we saw yesterday, easing the public offering norms for very large companies. And some reports are indicating that that is something which is likely to do well for the eventual listing of Reliance Jio. Just put into perspective, what are these changes that SEBI has now put out as a proposal? And is it likely to impact investors? And if so, how?
Uh, I would have to do a deep dive there. I've really not gone into it to be specific.
Right.
But every reform is usually positive. Every easing is usually positive. So I just generally think it's good news.
All right, let's leave it at that. Rohit Srivastav, thank you so much for your time and thank you for joining us this morning on News9. Well, we will stick with markets for just a little bit longer because we also have Kranti Bathini joining us this morning, equity strategist at Wealth Mill Security. Kranti, good morning. Pleasure having you here with us. We were just talking about Reliance and the potential possibility of Reliance Jio and the ease with which Reliance Jio could now be listed with the new SEBI norms. But now, in fact, it's just a proposal at the moment. But now we are seeing Reliance, in fact, is in a bit of a correction mode this morning. The stock is down about 0.5% after the rally that we saw of as much as 3% yesterday. So is there something which is going on with respect to the AGM announcements of Reliance?
Absolutely, Kartik, as you rightly mentioned, okay, Reliance Industries yesterday was the outperformer and it could able to sustain the market.
Yeah.
Today, some commentary from the Treasury Secretary has been creating some kind of a pressure on the stock in the medium to short term.
Right.
But as a conglomerate with different sort of strong business models, they are market leaders in terms of the Geo, which is into we call it as a telecom company, but Reliance portray this as one of the technology arm of Reliance Industries.
Right.
So, which is going to create a lot of value on the medium to long term perspective. That's where Reliance focuses on Geo.
Right.
But the stock is in a consolidation phase. Still, the overhang on the tariffs is creating some kind of a uncertainty on the stock in the medium to short term. But given the kind of strong business models they are right now incubating in the group, definitely for a longer term, this is the stock to look at. And the extra cherry on this cake is the Geo.
And staying with the cherry on the cake, Jio, it seems to be Jio's loss happens to be Airtel's gain. In fact, Airtel was up almost 2% intraday yesterday, and even this morning the stock is up about 1.5% or so. Now, with potentially Reliance Jio now listing eventually as a separate company, is there going to be more competition, at least as far as investors are concerned who want to bet on telecom?
Yeah, definitely, Kartik. And in fact, we witnessed in the past 3 years how a new company could able to give a tough fight to Bharti Airtel, and
Right.
Bharti could able to sustain that pressure.
Right.
So the duopoly game is still on, and we are going to see this action in the coming months and years also.